Hello, everybody. Welcome back to another episode of the Anonymous Investors Podcast. I am the man of Stonk, and as always, I'm joined by the heavyweight champion of the world himself, weighing in at 369 pounds. This morning, he had 5 Big Macs, 10 Whoppers, and 69 Chick-fil-A sandwiches. That's right, Chick-fil-A. And you know why I said that? His name is God. What up, God? Tell the people what's going on. Tell them what you're doing. Tell them about all the thick bitches in your life. Let them know.
Yeah, salam alaikum, Habibi. I don't talk like that. That's very disrespectful. Salam alaikum, inshallah.
We like bad bitches. That's all. That's all I have to say. Anyway, there's been a lot of crazy kind of things going on in the world. And I say crazy kind of things because the Large Hadron Collider was recently started up again. And because of that, there's been a lot of wacky shit going on. Really, when you look at it, they're like, CERN's like, yo, we have this thing, the Large Hadron Collider. The whole point of the experiment is going to recreate, we're going to have a particle accelerator and we're going to recreate simulations of what happened at the dawn of the universe, which is kind of nuts. They're basically trying to recreate the Big Bang. And shortly thereafter, there's been a lot of weird shit going on. And I mean, there's always a lot of weird shit going on. I say that every week. But really, especially this week, it just seems like it's been kind of worse. So I know that, we spoke about sanctions and stuff like that ad nauseum, particularly on this show, but there's a case with Iran where Iran was just sidestepping all these sanctions and all these boundaries that they really, were not supposed to cross. But of course they did because it's a free market, right? If they can't get it from wherever, they're going to go somewhere else. And that's, I just wanted to share that. That's my Iranian burp right there. But if you can't get it from one place, you'll get it from another, right? Same thing with guns, same thing with drugs. If you can't go to whatever fucking gun-free zone, super liberal place where they don't sell guns and they don't believe in the Second Amendment or whatever fucking kind of deal. Maybe you live in Australia and they're like afraid of everything there, even though they're the descendants of prisoners. A lot of people don't know that Australia was a penal colony. That's where they sent all the bad people who acted up in England. They sent them to fucking Australia, and they were like these hardened criminals that had kids, and now they're like the biggest pussies on the planet, pretty much. Outside of you fucking Chinese motherfuckers, I'm just kidding. But yeah, if you live in one of those places where it's impossible to get a gun, but you want a gun, you're gonna figure out a way to get it on the black market, and that's kind of how it goes. The market keeps moving, whether it's illegal or not. But God, I remember you were telling me about this offline, and I know you could share more about Iran, and I think you should because a lot of people want to know about that. So take it away, my friend. Let them know about the bad bitches in your life, the bad Iranian bitches.
Again, salam alaikum. Basically, Iran they set up a sanctions evasion network after the U.S. put sanctions on Iran for their nuclear deals program and then refusal to shut down their nuclear deals program. And the Chinese, right? Fucking Chinese, the Middle Easterns, like the Pakistanians, all those motherfuckers. They helped the Tehran, they helped ISIS, they helped Al Qaeda basically circumvent sanctions in order to keep their economy afloat. And the U.S. thought that this sanctions program was basically going to cripple the Iranian economy, and they were going to be forced to capitulate to U.S.'s demands. But they got another thing coming. What they don't realize is, right, you cannot, they're not motivated by money. These people are motivated by religion, and you're trying to basically get them to capitulate through monetary sums. They don't care about money. The Iranians, the Pakistanians, and such. So these sanctions are not going to work on these people. And same thing with Russia. Sanctions are not going to work on the Russians. They have mass nationalism and pride in their country, and they want to expand and basically, restore the Soviet Union. So basically, putting sanctions on them is not going to work. And you have to get all these countries on board all whatever 194 countries, however many countries there are. You have to get everybody on board in order for the sanctions to actually work. And just like Russia, where we handed them over all these companies, we basically handed them over after we took Russian companies out of our ETFs, out of our pension funds, and we lost hundreds of billions of dollars, and basically eroded all of our pension assets, and we handed it to Russia for free. We basically did the same thing in Iran, where we gave them the oil, and we gave them pricing power in in energy and such. And what basically happens when you sanction a country and you try and circumvent capitalism? What happens is you lose, and the sanctioned country always wins. So sanctions do not work, as said in January, and as always said by the Almighty me.
It's funny you say that too, because especially with the Iran nuclear deal, I think one of the terms was that they got a nuclear scientist, right? They got like their lead nuclear scientist back who was in custody. And then shortly thereafter, he was fucking taken out. He was assassinated. Do you remember that? He was in like a car and they drove like an RC car under it and they just fucking blew it up and they killed him. But yeah, it's just funny how some of that stuff works out. And people still don't realize that sanctions literally will never work because you have to get 193 countries with all differing ideologies and all differing um, political adversary groups and different leaders all on the same page. It's just never going to happen. It really is never going to happen at all. As long as there are people who have diametrically opposed viewpoints of how civilization should exist, there will never be people on the same page. The only way that would be possible is if there was like one unifying body. Like even look at the UN, like the UN is probably the best case attempt at trying to unify nations to kind of work in like a cohesive manner. I guess you could say the UN or like NATO. And even then it's really not all that great at peacekeeping because as you could tell, even though theoretically countries are more unified now than ever before, especially against common enemies, there's still conflict that happens all the fucking time in the world. So it clearly doesn't work. Just like you clearly can't get countries to agree on sanctioning all, everyone sanction whatever country. Like it's not going to fucking work. And it's just going to hurt the citizens of that country that maybe they don't support what the regime is doing. Like how many Russian people do you think probably don't support Putin? I would think probably the majority. They don't want war. I remember we spoke about this a little bit. This was way back in the day. We spoke about some of the protesting that was going on outside St. Petersburg and in Moscow, and there were a lot of fucking people on the street protesting the war and protesting the Russian aggression that was happening in Ukraine. So there are a lot of people that they don't necessarily even want some of this stuff to happen, but guess what? They have to pay the price for the sanctions. Putin's one of the richest guys in the world. A lot of people don't even think about that or talk about that. He owns a stake in a lot of these oil and gas companies. And guess what? Look at the price of oil right now. And if you think Putin's not selling to other countries who are then selling to the US or to the EU, you are sadly mistaken. Do you know how easy it is to do that? He could just sell, like, let's take a company like Lukoil, for example, that's clearly a Russian oil and gas company. Lukoil can just turn around and sell to Shell under the table, and Shell can just relabel the fucking barrels and say it came from them. I mean, what's the verification process for whatever Shell produces or not? It's not like there's someone standing there watching every single barrel of crude oil that gets produced or gas. Like it's just not going to work like that at all.
You know what sanctions are? Sanctions are basically created, right, to make politicians rich.
Yes,
they keep all the
yes.
citizens out of the fucking market, and then they're the only ones that could do business with the country, and they basically create a monopoly. A monopoly can only be created by the government. They create this artificial monopoly, and they rake in the cash. And they basically they're the only ones that deal with Russia. They're the only ones that deal with Iran. They're the only ones that deal with these countries, and they're the ones that are pocketing all this money. That's why these people go in with a fucking penny in their pocket, and then they magically walk out with $1 billion net worth 2 years later. Well, I wonder how.
Yeah, it's all political grandstanding. I'm 100% with you on that. There's no doubt in my mind. And on that same topic of political grandstanding and things like that have been going on in the world, we mentioned some of these oil producing countries and companies and things like that. But it seems like India, there's been a lot of political grandstanding, which is kind of surprising because you really think that wouldn't be the case over there as much as it is here in the US. But it is. There's a lot of stuff going on, a lot of different regulations. Um, we spoke a little bit about how in the US, it looks like the crypto market is seeing more regulation. Although at this point, it seems that the current regulation in place is more of the free market taking hold and correcting itself for all of the over leveraged piece of shit companies that have been kind of taking the brunt of the bat, for a lack of a better term. But in India, it seems to be that the government is more stepping in and taking the initiative and kind of slowing down that crypto growth and crypto market. If you remember, China banned Bitcoin earlier this year for about, I don't know, the 45th millionth fucking time. They always say that, and it seems that they always say that to sink the price of Bitcoin, and then it magically seems to go up shortly thereafter. But it looks like, India came out, remember, and they said they're banning Bitcoin, and now, what did you tell me offline? They're proposing some type of 30% tax or something like that.
Yeah, they're gonna tax all Bitcoin holdings 30% of your unrealized gains if you currently have Bitcoin, and then when you buy Bitcoin now, you have to pay a 30% fee upfront. So if you spend $100,000 on Bitcoin, you have to spend another 30,000, and it goes right to the government in tax.
Well, that sounds like fucking blatant theft. That kind of reminds me of Biden's proposal to tax people on unrealized gains. Remember that shit? And then it got scrapped.
Yeah, but this has like a very high chance of going through, I think. And they said that participation in the crypto market in India has dropped 95% since the proposal, which is probably their objective. They want to get all the people out of the crypto market in India.
Yeah, that's pretty horrific. And, on that same line of topic of people getting out of the crypto market in India, it looks like there are a lot of Americans getting out of the crypto market. I mean, Bitcoin kind of coming down. We've been saying that we like the long term prospects of Bitcoin. We're both kind of very bullish in that respect. But we did mention and we did say extensively that we do think that there are some entities and some dominoes that need to fall and some bad times that need to come before the real good times will roll in. So we spoke about some of these companies ad nauseum about, well, really more specifically with those companies ad nauseum. We've spoken about how silly they are, how stupid they are, and how over leveraged they are, and some of the varying different problems that they have, whether that be financially, regulatory, any sort of aspect like that. But we also mentioned about Sam Bankman Fried with FTX going around and kind of bailing everyone out. He also came out recently and he said that there are more companies that are going to get hit hard and more companies that are going to go under. And he just said, it's basically just the free market taking hold here. And I completely agree with him, especially in that crypto space. When you think about the legitimate and like last free markets in America, it's probably like, I would say, which is a lot of people might not even realize it, but like that whole anything with like collectibles or like graded or graded sports cards is up there for sure, or like graded comic books or any type of collectible market like that, and then crypto. Those are the last free bastions of free market capitalism left in America, I would say, without too much regulation. So that's pretty cool to see. But the main thing here that I want to get to is that we've mentioned and we hyped up Coinbase and some of these other exchanges that have been pretty good, but Voyager was one that kind of came in and they were a little sneaky. And Voyager ran into a plethora of problems. We previously spoke about this with 3AC Capital, and it was this big hedge fund. I believe they were based in Singapore, right, God?
Correct. Yeah, 3 Hours Capital was based in Singapore, but yeah, Voyager. They went bankrupt. A huge problem in the crypto industry now is that they just keep rehypothecating the cryptocurrency that they have on their balance sheet. So, say you deposit or buy cryptocurrency on one exchange, right, and then you loan it out, then the exchange is basically going to take a loan on your cryptocurrency. So, they say like, we don't really know. It's not really transparent about how many times it's loaned out. Is it loaned out 10 times, 15 times, 20 times? And that's the problem with a lot of these exchanges when they get one person or one of their lending clients goes bankrupt and they don't have assets to pay back all of their clients, and they get into huge trouble because they're over collateralized and they're over leveraged. And that brings up the topic of basically cryptocurrency regulation. And there's a couple of regulations that I think the cryptocurrency industry should take. They should regulate stable coins, and they should basically regulate it like a money market account, where they check, they audit it on a daily basis and then a monthly basis as well, and they make sure that it's backed 1 to 1 by assets that are liquid and that can be sold in under 12 months. And I also think another problem with the cryptocurrency industry is when you look at collectible assets, NFTs, and such like that. I think they should put a rule in cryptocurrency like they did with stocks, like the um, IEB Section 502, or basically, the prescriptive compliance method, which is otherwise known as the 5% rule. And they should put in like once you own 5% of a cryptocurrency or 5% of an asset of the cryptocurrency asset, you should be forced to report it so that you don't get these like wolf packs that are formed and that basically artificially pump up the price of a cryptocurrency. Because you see that with a lot of these currencies where uh, 80% of the coin is owned by one person, and then they're just holding it, and then they're artificially pumping it up through fake trading volume and such like that. So like, we got to put some of these regulations in place.
Yeah, and two of the biggest things that you just said that stood out to me completely was you were talking about rehypothecating, and then you also mentioned the idea of having stable coins but regulating them like like money market instruments and things like that. A lot of people don't know what rehypothecating is, so I guess to kind of give them some broad like definition of it, it's basically so like when you go to a brokerage house, I'll use that as an example, or you open any type of brokerage account, whether you go to Wells Fargo, fucking Charles Schwab, Fidelity, Vanguard, etc., E-Trade, right? I don't know what you guys, Robinhood. And let's say you're going to use margin, you have to fill out like a hypothecation agreement, which basically means that um, in the event that you default on whatever margin you had, you get margin called. They have rights to asset seizure to then be able to pay off creditors, or in the case of them being the creditor, they have the right to, rightfully so, collect on whatever you defaulted on. So, like God said in his previous point, is that a lot of these agreements are signed and you have people taking out loans on crypto and they're kind of arbitraging the loans. But in doing so, it's like the same groups of people are exposing themselves to the same credit risk and lending risk and moreover business risk, because if you're loaning to person A and you're entity Y, and entity Y, you are getting crypto from, whatever company C, like company C is at risk because you're lending out to that customer, right? Or whatever the case may be, because you're just using the proceeds from the loan they gave you to then reloan it back out. So it becomes this weird, tricky dichotomy. Now, as far as money market instruments and what you previously mentioned, God, so there's coverage for money market instruments, and it's called SIPC. Maybe you've heard of FDIC, but SIPC is basically the same thing. So it's protecting against the loss of cash and securities. So that would be any type of like equities, as well as debt instruments like bonds. So it would be at any type of SIPC member firm. And basically the limit is 500,000 and the limit for cash is 250,000. So now you mentioned with stable coins about having them regulated like money market instruments. Would you think that any type of I guess SIPCS coverage would be suffice too, or like how would you kind of regulate that?
Regulate stablecoins or regulate.
Yeah, regulating stablecoins, because you mentioned that you would regulate them as a money market security. So would you have some type of like SIPC coverage or something similar to that?
I mean, you could have private insurance. You could insure it through the Lloyd's of London or such like that. I don't think you necessarily need SIP insurance as long as it's audited and marked to market at 4 p.m. each day. I don't think you need any kind of insurance and such. You just have to have an auditor sign off on it. So like one of the big accounting firms sign off and make sure that the money's actually there each day at 4 o'clock.
Well, you don't want an attestation because that doesn't mean shit. That literally doesn't hold up in court. Like an attestation doesn't mean anything. Like
No, an
Tether
audit, a
has been
full audit, not an
screaming.
assertion.
Yeah. Okay. All right. A whole audit. Like you want them signing off. Like boom, money's there, money's there, money's there.
Right. They don't sign
Yeah.
off. Then
Okay. Because the whole thing is that you see this a lot, especially in the crypto space. Is we saw this with Tether. They get like these attestations, and like every couple of years, they keep changing auditors. Really, like what happens is if you're a publicly traded company, you have to change your auditor. This is a provision of Sarbanes-Oxley. I talked about this in the Dolo episode a little bit, but Sarbanes-Oxley was introduced in 2002 after the collapse of Enron, and it's basically this amalgamation of laws, and one of which is publicly traded companies have to change independent third-party auditors every 5 years. But you're seeing Tether change auditors a lot more frequently than that, which means that there's usually some shenanigans going on. And more often than not, you could actually kind of spot these trends with certain publicly traded companies that consistently change auditors, right? Because I used the example in that episode of Apple, and I said, if you're Apple and you're this big prestigious company and you have a ton of money, like you're going to have people line down the block to be your auditor, right? So the whole thing is that if you don't really present the results in a favorable light that they're looking for, they're just gonna can you and hire someone else, and then that's it. So in the case of Tether, it looks like they keep constantly changing their independent auditors, which is a major red flag, like I said, because they're first of all not a publicly traded company. Bitfinex is not a publicly traded company either. So for them to go out of their way to consistently change auditors on a routine basis is a lot more alarming than most people would think. So that's something to be considered as well.
yeah, it's honestly nuts that a $200 billion asset or whatever Bitcoin is right now, they don't have any kind of corporate reporting procedures put in place. Like any company that makes I think they have to have like 10 million or more in assets. They have to basically report to the SEC and basically file income statements and such like that. With Bitcoin, you have $200 billion of assets. You have no idea who owns it. You have no reporting requirements on how much each person owns. So you don't know if there is shadiness going on between different wallets and such. You don't know if they own 5%, 10%, 20%. You don't know how much any single party owns, and you don't know if there's any kind of insider trading going on between parties with these spoof trades or whatever that they could be doing, and you have no regulation in the whole market needs to be regulated basically. Otherwise this could cause a catastrophic event like Lehman Brothers 2.0.
Absolutely. And you mentioned about SEC regulations and things like that in the crypto space. So in the financial industry, if you have assets under management of over 100 million, you have to file with the SEC directly. And then if you dip under the 100
Oh,
million,
10.
well, what I'm talking about is in the case of like an asset manager, it's 100 million you have to file, and then anything under 100 million, you would file at the state level. You would file with whatever states that you were registered with, and then really, moreover, it would be specifically where you have like a physical, like headquartered office that they would kind of take, sort of lead in how you go about doing your business. So. I'm just talking about specifically with like a broker dealer or like an investment advisory firm, in the financial space. So, but yeah, at other levels it is 10, but in finance, and if you're like an IA or a BD, then it's like 100 million. And then they give you a 10 million buffer. But if you're at that like 90 range for like a little while, you're good. But I think if it's more than like And I'm pretty sure if it's more than like 6 months, if you're at 90 million, then you have to refile. You have to file a new form ADV, and then you have to change everything. So
Yeah, it's a crazy crazy world we're in. There's basically when in the crypto market, there's no framework for any kind of risk assessment. We're rehypothecating assets. We have no mechanisms basically to track risk and measure risk. We don't know what the fuck's going on. We're misallocating assets to these fucking Ponzi schemes and Celsius and Nexo and all these motherfucking fraud ass motherfuckers. And we basically have no understanding of risk and we have no experience in this field. And these fucking Celsius fucks, these Voyager fucks, I think people should be going crazy rioting, and they should fucking get these motherfuckers. The CEO Stephen Elric of Voyager was walking around saying, "Oh, we only lend our assets to top quality institutional investors. You lent your fucking money to Three Arrows fucking Capital, right? Who had fucking 2 billion in assets. They fucking levered their motherfucking money up to 18 billion. They had a fucking 900% return, and they were fucking leveraged up to wazoo. And you didn't fucking check their credit profile. You didn't do any kind of fucking compliance. You didn't measure any fucking thing. And you fucking Stephen Elric, you should be fired as CEO. You should get sued into fucking oblivion. You should lose your fucking house, you motherfucker, because you fucked all these people."
yeah, I'm totally with you on that. I love that. Some people would say it's un-American to fuck people over like that, but you know what really is un-American? And I'll tell you this: Airbnb. Airbnb, those communist motherfuckers, they came out and they said that their party bans are permanent. Now, I don't know about you, but that might be the most un American thing I've ever heard in my fucking life. All right? First of all, we're Americans, motherfucker. We work hard, we fucking play hard, okay? We party and we have fun. So if you're going to be pulling some liberal bullshit like banning parties, and telling people hardworking, tax-paying, God-fearing Americans, and you're telling them, "Oh no, you're not allowed to party anymore. If you party, you get fucking banned, motherfucker." You know what's gonna happen? Nothing. People are still gonna fucking party at the Airbnbs, and nothing's gonna change. And then when you ban them, they're just gonna use VRBO or some other fucking local thing where they rent a place and they party. That's it. If you're going to Miami or you're going to fucking Austin and you're getting a house and you're there with friends or whatever and you're staying there for a week or however long, like you're fucking partying while you're there. It's just an inevitability, especially if you're younger. That's it. You're just partying. There's no stopping the party. Party in the USA, like Miley Cyrus says. And you know what? These fucking communist motherfuckers, they should be ashamed of themselves. And really, when you look at their business model and you see how they don't make money, it makes perfect sense now because they have management in place that clearly is very un-American, and people don't really like that, and they don't support the business, and that's frankly a big problem.
Well, I'm going to take the anti-hypothesis. I kind of agree with this party ban, right? You don't want people, throwing their semen on your bed and fucking putting semen on the walls and such.
The cheeks. Let me just say this. This is a PSA. Listen, Airbnb, you got to listen to me on this Airbnb. Let me tell you something. Okay? I hate to tell you this. Airbnb, listen to me. Brian Chesky, I know you're listening right now. I know you're a fan. I was tipped off that you're a big fan of the Anonymous Investors podcast. So I want to take some time today, and I really want to say this, and I want to be very clear, and I don't want you to think I'm mincing words. And, Brian, listen, I know you're listening, Brian Chesky, okay? I know you're a big fan. We have mutual friends. We go to Zero Bond, okay? We play nice in the sandbox, okay? But I need you to understand this. You can have all the party bands you want, and you can do all this other stuff, but I got to just tell you this one thing. The cheeks are getting clapped in the beds, and there's nothing you could do about it. There's nothing you could do about it.
I'm going to disagree, right?
Brian, Brian, and God,
listen
hear
up,
me out.
inshallah.
The cheeks are getting clapped, and that's just what it is. Like the cheeks will always be clapped.
The cheeks will
That's it.
not listen.
The cheap clapping will commence. That's it. It
Listen,
will
listen,
never go
listen,
away.
listen. Cheeks will not be clapped, inshallah. Um, what you have to look at is right. You basically should require the person that writes down the name and books the Airbnb, right? You write down no guest, and basically Airbnb should have a policy where any guest coming to the home, basically you put the fucking Ring doorbell on, and if they come in, then you basically could kick them out of the place, take their money, and tell them Saranara. That's it. No party, no nothing. I got my money. You're out of the house, and then I book it twice, and I get double the funds. There will be no cheek clapping, right? There will be no jerking of the hand. There will be no fluid motion. There will be no blenders going off. There will be no pegging going on. There will be none of that kind of stuff going on in the Airbnb, and there will be no cheek clapping because what will be happening is I will be collecting my money, and there will be none of that going on, and I'll make sure of it through uh, many different mechanisms that I have in place.
Let me just tell you something here, and maybe you don't understand this, but here's what's gonna happen. The cheek clapping will happen, and there's nothing this guy can do about it. And that's just what you have to accept. It's just a fact of life. And if you do anything with that Ring doorbell or whatever, that's a violation of the guest Fourth Amendment right, which protects against unreasonable search and seizure. Okay. When our founding fathers,
Too bad they don't own the
let me
property.
just say this. Let me just say this because the holiday just passed and people need to know about this. And this is really important stuff here. Otherwise, I wouldn't talk about it. Like I said, we are the paragon of integrity, the Anonymous Investors Podcast. We are exemplary citizens, high moral character, okay? And let me just tell you something. On July 4th, 1776, when that Declaration of Independence was signed and the great country and the great nation of the United States of America was created, they then went into creating a Bill of Rights when they created their Constitution and they drafted everything in place. Okay, that Fourth Amendment, when they created that, no unreasonable search and seizure. A lot of people don't know this, but there was actually a clause, and there was like a little asterisk after that. You could go back, you could look at this. I think Ken Griffin's got the original copy of the Bill of Rights, or like the second copy of the Bill of Rights. You go ask him; he'll tell you. But it's a fact. It's not a conspiracy. This is a conspira fact. Okay. There's a little asterisk after it, and if you go all the way to the bottom, it says, this provision protects guests staying at Airbnb locations from being exempt from clapping cheeks. And it's just a fact of life, okay? The Founding Fathers, when they created this country, cheek clapping was very important. It was very high up on the list. You think about the First Amendment, you're like, okay, free speech makes sense.
Listen, listen, listen,
Second
listen,
Amendment,
listen.
right to bear arms. You know what the Third Amendment is? Oh, I bet you don't know what that is. That's soldiers cannot stay in civilian homes. They had a big problem with that. British soldiers were annexed to civilian homes, and the civilians had to take them in. And the civilians were like, what the fuck? I got these fucking random soldier assholes living in my house. Get the fuck out of here. And the Fourth Amendment, no unreasonable search and seizure. I mean, it really might as well be cheek clapping will commence for all, you know? That's what it's about.
You got to listen now. You listen, all right?
And Fifth Amendment is self incrimination. We all know that.
All right, listen. We don't care about that kind of talk. Listen. A renter of an Airbnb, right, is not really a renter. They're a licensed guest, right, with no tenant landlord rights. And they accept the fact that the landlord has the right to remove the party for any heinous acts, and that includes cheap clapping. Okay? You understand?
The cheek clapping will commence. And you know what else will commence? Apple celebrated the 15th anniversary of the iPhone. Can you believe that? It's been so long. 15 years since Steve Jobs first unveiled the iPhone and fucking put the world on its fucking head. Okay? Think about what is innovated with Apple since then. By the way, not very much. The camera on the iPhone got better. The specs got better. It got a little bigger. It's thinner, right? But there hasn't been that much innovation since then. And it kind of bothers me because I like Apple. I like some of their products, not all of their products. but some of them are really good. And the phones are pretty good. The UI is good. The software is very good. The hardware kind of could be a little better, but their computers I am not a fan of. I don't really like anything else that they make beyond smartphones and the UI and everything. And the App Store is awesome. But I will tell you this. I wish I would see more from them, especially considering the fact that they have so much fucking cash. It's like, dude, just literally buy something and just fucking slap an Apple logo on it and sell it for a gazillion dollars and people will fucking line up to buy it. I don't understand. I don't understand. Their biggest innovation in the last 3 years was a fucking Apple Card, Apple TV, and what, that subscription service they rolled out that you were talking about? It was like Apple Games and then this other shit. It's like Apple News, right?
Well, we do know, right, that they got rid of they have wireless headphones. We do know they have AirPods.
Yeah, but that's all bullshit about the wireless headphones, and I'll tell you why. Because with the iPhone 8, they got rid of the headphone jack port and they just made a charging port which also plugs into the wired headphones. So you can't charge your phone and have wired headphones in. So that's why they created the AirPods. You do know that, right? Like they phased out the separate headphone jack. So if you wanted to use headphones, wired headphones, you had to fucking plug it into the phone and then you couldn't charge it at the same time. So they basically created the problem and then sold everyone on the solution.
Well, what about the Apple glasses?
Oh, that's not really that big of an innovation. Come on now.
Oh, they say it will replace the iPhone by 2025. People will not be having phones; they will be just having these glasses that will project images.
Yeah, what? Google Glass? Google did that fucking 12 years ago, bro. Come on.
I don't know. I think I think the iPhone's gonna be gone by 2025. We're gonna have these Apple glasses.
Yeah, that's complete bullshit. No one's going to part with their iPhones. I think it's an interesting innovation and I'm intrigued by it, but at the same time I feel like there's a lot more that could be done. They have so much fucking money and they don't spend it. Like, what are they waiting for? They don't even invest it. Like, what the fuck? Just literally buy these companies out left and right.
You're a
You know who does
communist.
that too? You know who does that too? Fucking Facebook. Or, oh, I'm sorry, Meta. The metaverse. The biggest fucking scam ever, the metaverse. That fucking most retarded thing ever. Literally, Zuckerberg created the metaverse because he knew earnings were going to be so bad that he was like, "Oh fuck, metaverse," and then it just became a thing. Let me tell you something. At least Facebook, they own Oculus, right? Like Oculus is good, and like the Quest headset and everything like that, like that's kind of dope because there's like somewhat of an application with that, but anything else, dude, like bro, there's still a lot of room that Facebook can grow and Apple can grow, and they really haven't tapped into that. And I'm very disappointed in both companies. I just feel like when you have a lot of money like that, especially if it's not doing anything, it's not earning you money, you have to deploy that capital. When you're the CEO of a company and you're on the board, you're really like a steward of the investor's capital, and the whole point is to grow that capital and to reinvest into different initiatives and to kind of be smart and be proactive. And I'm just blown away that they don't really do that and they're not looking to do that. It just seems like very linear and not very exponential thinking going on. And I don't like linear thinking. I like exponential thinking. I like people who look at something and they get a lot of capital and they're like, let's go and, let's look into this. Let's tap into this. I mean, really, if you're Apple, there's no reason why they can't kind of get into some of these other markets. Like when drones were hot, I was thinking, oh my God, Apple, just go buy fucking DJI for like $500 million or $1 billion and make a fucking Apple drone. You know how quickly that would sell out? Make it white and paint the fucking Apple logo on it or whatever, and then be done with it. Like that would have been good. Or GoPro. Remember, GoPro was hot for a while too. That would have been a good one for a little while at least. They had decent earnings for a little bit. Now, ultimately not, but they did have decent earnings for a while. That would have been something that could have been cool too. Or just anything like that, like any sort of company that's like kind of niche that makes a product that Apple really could upsell their clients on and their, long-term loyal customers, but instead they're making the fucking, oh, my $80 stylus, $100 stylus, the Apple Pencil, really? Who the fuck is buying that? That's the dumbest shit in the world. Just literally use one of those pens that has that rubbery end on it. And I'm not talking about the front end of the pen, but the back end of the pen. They make these pens. I see them all the time. They're like these metal pens that you get for free at a bank. You could just flip it on the backside where that rubber part is, and it doubles as a stylus. Like, so why would you ever spend $100 on a fucking Apple Pencil? Oh my god, oh, $100 for a giant fucking piece of shit plastic white, disgusting looking ass fucking stylus. Dumbest thing ever.
I think you have a lack of understanding of the financial markets, right? You're proposing that Apple spend its money and buy companies, right? While interest rates are going up, while we're going into a recession,
Excuse me, the
demand
interest
side
rate.
is going
Excuse
down.
me,
We have
the,
a
excuse
demand
me,
side
excuse me.
recession, right?
The
We have a
interest
supply side
rates,
recession,
the
and you
interest.
want
Apple
Apple
has.
to basically spend all their money buying up companies while these
I'm not
assets
saying that.
are going to
I'm not
have
saying.
discount rates
Excuse me.
greater than that, while earnings are going to go down. And
Excuse
you want
me.
Apple to basically get rid of their buying power and get rid of their leverage to basically scoop up these assets for pennies on the dollars. You want them to spend it before the market goes down and corrects. Do I understand what you're
Well,
saying correctly?
first of all, I don't believe in testing the depth of a river with both feet. So that's number one. You got it way wrong. I'm not saying drain the bank, go fucking full retard, and spend all of your money. That is not what I'm saying at all. That's number one. Number two, you are under the assumption you brought up interest rates. Interest rates are applicable when you are taking out a loan to buy a company. Apple is in no position where they need to do that, and they have a very clean and strong balance sheet, a very clean and very strong balance sheet with strong financials to back them. So there's no reason for them to take out loans to buy out certain companies. That's number two. The other thing is that, yes, they could use leverage and they could write some of that off, and they probably realistically should. But in a downturn market like the one we're heading into, very, like you said, rising interest rates and very recessionary, you have to be careful and you have to tread lightly. The other thing is, I will say this, number three, is that you only buy other companies when it's, here's the term for you, synergistic. Synergistic. You buy a company when you believe that in buying that company, you will be able to make your money back within a reasonable amount of time and it will add value to the pipeline of products you already have. In the case of Facebook, them buying Oculus at the time people thought was kind of nuts, but Facebook has and even to this day has so much capital that buying Oculus was so worth it for them because now it's another pipeline of product. It's something that they can kind of build off of and kind of build themselves out to be more of a multinational corporation rather than just a one trick pony. They obviously didn't really build out Oculus as much as they should have, but by adding that IP into their pipeline of products, it also diversifies the streams of revenue. And it is a new and exciting space, particularly with VR. Why Apple didn't do that, I have no idea. Apple could very easily make a VR headset and tap into that. They could very easily think about it. Apple, people were talking about Apple Car, Apple Car, Apple Car. Elon Musk was talking about it. Okay, Apple could have partnered with BMW, which this was rumored to happen for quite some time. They very easily could have partnered with BMW and literally just took a BMW i8, which is a hybrid, by the way. A lot of people don't realize that. The BMW i8, I know you're not a car guy, really, but that's the BMW that looks like the spaceship with the doors that go up. They could make it white and put a fucking Apple logo in there and then slap an iPad as like the touchscreen or whatever in like the console of the car, and people would line up in droves to buy the car. They'd be like, Apple Car, Apple Car, Apple Car. Like they could sign so many things. They could license out the technology in that sense, or a car. You could do a partnership and do a rev split. Like there's so many different things they could do that they just don't do because they have some guy who's the CEO now who, clearly he's very smart and he's very bright, but he's a linear thinker. He is not an exponential thinker. He's no Elon Musk, and he'll never be in that same conversation. And it's just, it's mind blowing to me.
Okay. I have to basically refute and everything you just said, because you said a lot of things that were just plain out wrong. Okay, you said he's no Elon Musk, but who is Elon Musk? Elon Musk is one of a kind. So that refutes that statement. And then you said interest rates, right? They don't mean anything because Apple is not borrowing money. That is completely false, right? That is completely wrong. And that, stocks are basically based off of risk premiums. And you have to put a risk premium on the treasury rates, which is then thus based off of the interest rates. And that affects the company valuation. So even if you're not borrowing money, right, the interest rate affects how much Apple is going to pay for the company when they discount the cash flows. So basically, what you said there was completely false. It was completely disingenuous, and you're misleading the audience in that regard. And you have to basically discount uh, the stock back to the present day cash flows and apply the proper risk free premium on the asset. And when interest rates are rising, Apple can get a much better deal if they just hold the cash and they wait, instead of basically scooping up these assets, like you said right now, in a time that is not really good for scooping up assets. That's why Elon Musk backed out of the Twitter deal, because he knows that the risk premiums will be coming down in 12 to 18 months, and he could basically buy Twitter for cheaper, or he could start his own social media company for cheaper. So basically, saying Apple should get rid of all this cash and all their leverage in a fucking recessionary environment is completely ludicrous. It's completely insane, and it's basically it's borderline crazy and unprofessional.
I think for Apple, especially as a company that holds well over $200 billion, I think they could afford to make a deal for $1 billion or $5 billion or whatever the case may be. Maybe limit yourself to spending only 10 billion of that 200 billion and just see if you can incorporate some type of new and innovative IP regardless of the environment. If you make your money when you buy, right? So if you buy at a good price and you can incorporate this IP into your umbrella, whether or not you overpay by $1 billion doesn't matter, because if you end up making that money back and then some, you're good. You're in a good spot. Like think about what Facebook paid for Instagram. A lot of people at that time would have said that valuation's high. They more than made their money back on Instagram. Think about what Facebook paid in buying Oculus. They've more than made their money back on that. Think about what Google has made in data collection and in terms of increased valuation and in terms of recurring revenue from YouTube, right? At the time, people said, you guys are fucking crazy. It's 2005, it's 2006. Google, you're going out, you're buying fucking YouTube. What the fuck is YouTube? And then now look what happened. So it all comes down to, and another aspect too, that you are wildly discounting. You want to talk about discounting cash flows. How about you discounting the brand recognition, the brand loyalty, and the built-in consumer base that a company like Apple already has, right? There are people who are Apple diehards, and they will use anything that Apple slaps their logo on. That in itself is inherently valuable because it means that you automatically have a built-in consumer base for the product once it is incorporated under the Apple umbrella, which means that there's already recuperation of capital that you deployed in purchasing another company. So you are wildly discounting that. Now, if you want to get into fundamentals and talk about the valuation says you should buy it at $3 billion and not
Well, they can innovate
$4.
and basically form the product themselves.
Who cares?
If
Who
you
the
think their
fuck
brand
cares?
value is so valuable, right, then they don't need to buy it from somebody else. Why don't they just find the product
Okay,
themselves if the brand value is the one that's
because the
propping
whole
up the
thing,
valuation?
no, the brand, no, but the brand
Ah.
value, you're not following with my point. The brand value for Apple is in the marketing. That Apple logo means a lot to a lot of people. They see that Apple logo, they associate it with innovation, creativity, trust, um, all these other different things that are more qualitative characteristics that
Okay.
I personally don't subscribe to because I'm a quantitative guy.
What's the
So
point,
I
though?
typically, because my point is this: you and I are very quantitative. We like to look at numbers, we like to look at fundamentals. We like to come up with a hard line valuation. But to discount the qualitative aspect of a company's branding and the trust that the public has in that company is silly. So if you overpay in purchasing if Apple overpays in purchasing a company and they overpay slightly, if they have that built-in base based off of qualitative characteristics of their consumers, it's perfectly fine. It's okay to overpay a little bit. It doesn't matter because they're Apple, and as long as they can properly incorporate the IP, I think it's worth it. Do you think that Disney overpaid for Star Wars and for LucasArts?
Okay. Let me basically go back because I have to basically,
You no no
explain to the
you
audience what you said. You said, right, you could overpay, right? I never heard of anybody saying that it's okay to overpay for an asset, right? You sound like a Silicon Valley bubble guy. And you don't invest in a company based off of what you can do for the company. You invest in the company based off of what its current value is and what the other company brings to the table, not the cost synergies and what you can provide for the company in the future. That's the benefit that you get on the upside. You Apple shouldn't basically put their brand value and what they can do for the company when buying the asset. That doesn't even make any sense.
you are wildly discounting the fact that whatever company Apple buys and then decides to roll out and with its own branding, in all likelihood will garner a ton of attention. It will garner a lot of sales within their cult following and the people who routinely buy Apple products no matter what. And that can't be discounted. That's stuff that's really important. And as much as I look at fundamentals and things like that, I just look at it from Apple's perspective, okay? I look at it, I have a theory about investing. And my theory about investing is it's much like baseball. So Warren Buffett has this analogy too, where he looks at it. It's this chart, and it's about Ted Williams, who is a phenomenal baseball player, and it's called like the science of hitting. And those hot zones, cold zone thing that the MLB currently uses. It's based off of that. Okay. Now, my theory with investing is that you have a finite amount of capital, and when you look at it and you think about it extensively, with this finite amount of capital, or it doesn't even have to be finite, right? Because the whole thing is that you're constantly making money and you're constantly able to invest in new and innovative technologies or in new spaces or maybe in spaces that are, well established and you're just looking for, I don't know, I guess mediocre returns or whatever the case may be, right? You could keep swinging the bat. Like, it doesn't matter. Like, if you're Apple and you have $200 billion, I'm not saying to swing, all 250 billion and to make 10 swings. I'm not saying that. I'm saying $1 billion to you or $2 billion is a drop in the bucket. Like, for you to swing that and to take the chance at buying a company that you think could tremendously add value to you, I think it's worth it, even if the valuation is a little bit, you know, is a little high. Like, if you buy a company out at 1 billion and you think, you know what, based on what we look at, they're really worth like 750 or they're worth half a billion. I don't really see a problem with that. I really don't. If you're in Apple's position. And that's the beauty of it, is you have so much money. You have such a big war chest that you can gamble. You can make a mistake and no one's going to crucify you. You can make a mistake. Shareholders will actually appreciate that more because they'll look at it from the perspective of like, oh shit, well, at least they're trying new things. Like, that's the thing with Amazon that people don't realize. Jeff Bezos gives interviews, and in these interviews that he gives, there was one that I saw in particular. It was a TED talk where he basically said, he was like, oh, Amazon, he's like, we've made billions of dollars in mistakes, so much so that they only like relatively recently started paying federal income tax because they had a net operating loss carry forward for the last, I don't know, I think it was like 10 years or so, because of business losses they accrued in terms of R&D and developing new products and developing new technologies in-house or whatever the case may be. And you know what? When you really sit there and you think about it, it's like that's how you innovate. It's like the company's constantly looking to innovate and constantly looking for new revenue streams and new ways to make money. Those are the ones that make it. They pass the great filter and they end up surviving any sort of economic downturn. Now, I'm not saying to recklessly fucking spend money if you're Apple, right? But I'm just saying, you can't be afraid. Like, you know, it's like you have $200 billion in the war chest. If you spend $1 billion and you fuck up, no one's gonna think otherwise unless you're spending it on some like crazy thing. Like I don't even know. Like I can't even think of something that would be so horrible for them to do. Unless it's something that's incredibly divisive that will like actually work against you, and then the marketing will be used to kind of dissuade people from being a supporter of Apple or being a customer of your products. I can't really see any downside there.
Wow. You basically said this is common phrases you said throughout that monologue. You can gamble, right? You can lose money, right? Shareholders will appreciate the money that you lose since you tried. Trying doesn't pay the bills. Passion doesn't pay the bills.
Spending
whoa, whoa,
one
whoa,
billion
whoa, whoa, whoa,
spending
whoa. You
one
don't my
billion
monologue
dollars
now. Whoa, whoa,
when
whoa,
you
whoa,
have
whoa.
two
Whoa, whoa,
hundred.
whoa, 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 whoa.
Okay,
I'm
so
on my
you're
monologue,
afraid.
buddy.
You're afraid of losing
Listen,
0.5%.
listen,
You're
listen,
afraid of
listen,
losing
listen, listen.
0.5%. That's what you're saying.
You don't
You're
understand.
fighting over nickels
You
when
don't
there are
understand the
dollars to
steps.
be made.
You don't understand the steps in the acquisition process and purchasing a business.
I do. I
You're
understand
basically saying
business
you gamble,
valuation
you can
very
lose
well.
money, right? Let me explain this to you, right? Step number one, you have to evaluate a business and you have to find a business to purchase. Step number two, right? This is a crucial step that you're missing. You have to value the business. You can't overvalue the business. You have to pay the right price for the business. That's step number two. That's the step that you were missing there, right? Then you have to negotiate the price. Then you have to complete your due diligence, and then you have to close the transaction. So you're missing step number two, valuing the business. You have to put the proper valuation on the business. You can't gamble. You can't lose money. You have to show respect towards your shareholders. And you could be thrown in jail for what you just
Shareholders
said
don't give a
previously.
rat's
You
ass
could be
about
thrown in jail,
0.5%
right?
of your cash
You have a
balance. They don't
fiduciary duty
fucking
to your
care.
shareholders to provide them with the return and to be a fiduciary. And you basically said, I'm going to gamble your money away. I don't think shareholders will appreciate that.
You
You
said
said they're
let
going to
me boil
appreciate that
down.
because you said, "Oh, we tried. Fuck you trying. I don't give a fuck if you tried. Return me my
Great.
capital with a premium."
Okay, great. I have a great example for you. I have a great example and a great point. We spoke about Apple extensively here. So I'm going to boil down what you said. Since you like to do that and you like to break things down into false equivalencies and use a plethora. You said plethora one time. It's plethora. That's how you say the word, you fucknut. So anyway, you want to boil down what I said into one little misnomer, fucking bullshit ass thing?
What
okay,
a circumlocution right there.
Okay, you ready? Here we go. Apple has $200 billion. You're telling me that you're afraid of spending $1 billion. You are afraid of spending 0.5% of your company's cash balance in acquiring another company that could possibly bring in anywhere from 5 to 10 times the amount. So in other words, you're picking up the pennies. You are picking up the pennies while I'm picking up dollars. Like I said, you're a linear thinker and I'm exponential, baby. I'm Elon Musk, and you know what you are? I'm Elon Musk, and you know what you are?
Wow.
You're fucking
misappropriating shareholders' funds.
You're fucking baldy Jimmy Bezos. That's
what a guy you are. Unlawfully misappropriating shareholders' funds.
Oh shit! No, it's
not a big deal.
That's not even close to fucking misappropriating.
It's only $1 billion. It's only $1 billion. No big deal.
$1 billion.
Only the GDP of a small country. It's only the GDP of Uganda. No big deal.
Uganda has 31 million tons of gold. Do not tell me that their GDP is $1 billion. If they have,
you believe that article?
If they have 30, shut up. Wait, hold up. It was on. I swear to God, y'all. All right, we weren't going to talk about this. This wasn't anything that I was thinking about. But now that you bring this up, you bringing up fucking Uganda, my man. Yo, Uganda's fucking booming right now, folks. Uganda has 31 million tons of gold there that they found in a geological survey. Are they full of shit? That remains to be seen. But the market value of that would be $12 trillion. Yo, Uganda would be fucking booming. They'd be as rich as the
What do you mean it
US.
remains to be seen? It's obviously fake.
Listen, I trust the Ugandanese, okay? I don't know if
Yeah,
that's what you call them. I'm calling
Ugandese.
them the Ugandanese.
The
Ugandanese
warlords.
nuts,
They don't even know how to.
motherfucker.
They don't even have excavators over there. They don't even know what the fuck gold is. They don't know how
No,
to use an
no, no,
excavator.
yo, you know those YouTube channels with the excavator? I'm sorry, you know those YouTube channels where it's like the primitive housing and the guy's like building with mud and shit? You ever see those? And they're like, build a fucking lagoon, and then the guy builds it. You ever see that shit?
Yeah.
Those are fake. There's like excavator tracks in the background, and people caught them and they started exposing them, which is kind of funny to see. But anyway, no, my point with Apple, and I just want to make this clear, and this is a great thing that people need to know and people need to understand here. You know, if you got $200,000 in the bank and you think that by spending $1,000, you can improve your life by 5x, 10x, 20x, 30x, 50x, I say go for it, man. I say fuck it. And you look at it based on the risk, you have to look at the odds, you have to try to quantify that in your head and say, okay, if I'm going to spend $2,000 on, you know, this new recording equipment, or I'm going to spend $2,000 on a new computer or $2,000 on whatever, and you think that you're going to make it back in 10, 20, 30, 50x, you fucking do it, man. And if you're Apple and you see something and you see a company that you could buy for $1 billion and you think you can make 20 to 30 to 50 times, but maybe you're paying a little much for it at the time, you buy that motherfucker, especially if you got so much money in the bank. And on that note, thanks for sticking around. Thanks for joining the Anonymous Investors
Tuvalu,
Podcast.
Kiribati, Marshall
I am
Islands,
Ston
Palau,
Command.
Micronesia, Tonga, Dominica, American Samoa, St. Vincent and Grenadines, Samoa, Vanuatu, and St. Kitts and Nevis, all countries with GDPs less than $1 billion that you're proposing that they should just, throw into the air and lose. Lose the GDP of these countries.
You got to spend money
and
to make
overvalue
money,
assets.
folks. Don't listen to this guy. If I was listening to this guy, I would be recording this podcast on a toaster. I would have a horrible audio setup. I would not have great editing software like we do. I would not have that beautiful thumbnail creation kit that we have. I would not have this beautiful visual overlay that you're seeing right now. We would not be on Spotify. We would not be on Apple Podcast. I would be stuck. I would be fucking recording with a toaster. It would be ridiculously shit quality, and you would not be listening. So
you have a lack of understanding, man. I didn't realize
this guy has no understanding of how to build a
financial
business.
Markets you have.
He doesn't know anything. He doesn't know anything about properly valuing
you don't
companies.
even understand,
He has no. This guy. Let me tell you something about this.
They lost $85 billion in value after losing the ruling in the App Store, and there's a lot of tailwind risk that you're not assessing.
That is a valid point. And that's something
you're not looking at the tailwind risk, and you're basically saying they should spend their money on unproven assets when they basically having trouble in-house managing the current assets that they have.
Not what I said. Not what I said at all. That is not what I said. I said that if you find a company and the valuation for that company is high, but you think that there is a good reason for you to buy them and incorporate them into the umbrella, I think that you should consider purchasing that company, which I think is a very valid point to make. Is a 100% valid point to make. Like I just said, 5x, 10x, 20x, 50x, you do it. That's it. Period.
Hey, you said overpay.
You do it.
I believe you used the word overpay.
And that's why I said that. I said it again. At this point, I've fucking quintupled down on it. Yes, I agree. 100%. I think if you overpay a little bit in the short term, it could be well worthwhile at the end. If you think this is key, if you think it can result in 5x, 10x, 20x, 50x, so on and so forth, absolutely it's worth it.
And you didn't overpay.
Overpaying.
And you didn't overpay
is well worth it then.
Because
okay, so then why are we having this conversation? And we've been talking about this for
the future value is 10x. You didn't overpay. That means you didn't overpay.
Well, that means that you don't have an understanding of finance because I'm talking about you have to calculate present value. I'm talking about. Oh, here we go.
I'm talking about SIE right away.
We can't talk over each other. It's not good to listen to. What I'm talking about, this means you have no understanding of finance. I'm putting it in plain terms. I'm talking about calculating the present value of future cash flows. And that's what you don't understand. I literally said that before, but you're fighting me on something that we both agree on. If you overpay a little bit in the short term, but the present value of the future cash flows will greatly exceed that
There's no
difference in what
overpaying
you
in the
pay
short
for the
term.
valuation, then it's fine. It doesn't
The
matter.
value is the value. There's no overpaying in the short term. You're
Very
you're
subjective.
misconstruing. You're
Valuation is
misconstruing
subjective.
price and value. Price and value are two different things, my dude.
My dude, you are arguing. Listen, folks, it's been another episode of the Anonymous Investors Podcast. I am Stonkman.
Price
This is
versus value.
God, this is what this guy does. God, like, you go to church and they go, God needs your money. He needs your money. You know why he needs your money? Because he doesn't make any fucking money, motherfucker.
Price is what it is
He
on a
wants
daily
your
basis.
pennies. He wants all of your pennies.
Value is what
And
it's
while
worth.
he's picking up the pennies, I'm picking up the dollars, baby. That's what I do. I'm picking up the hundies. I'm picking up the thousands. I'm picking up the Trump bills. The bills with Donald Trump on
I
them.
hope
the
you don't tell your
dollar bills.
financial advising clients, right? I
am
overpay for
very
assets.
good.
I hope you don't tell them that.
If the cash does not flow, then you must go, my friends. And
I
on
hope
that
you don't
note,
tell
like
your
I said,
clients I
thanks
overpay
for
for
sticking
assets.
around. We appreciate it. This guy, God, total fucking clueless bozo.
This
Doesn't know
guy
anything
tells his
about
clients I
finance.
overpay for assets. They're
Doesn't
gonna fire you
fucking
right away.
know anything. He doesn't have any licenses. You don't listen to him.
You're
Don't
lucky
listen.
this is
Go to
anonymous.
Skunk Man. I got
You're
the
lucky this is
licenses. I got the
anonymous.
licensure. I'm very good.
Oh my